Hey everyone, and welcome back. Now today I wanted to talk about Bitcoin because we're seeing some pretty interesting things on the chart, and so I wanted to bring it to you guys on the channel because I felt like they were worth going over. So anyway, let's go on ahead and dive right in. So starting off, let's look at the Bitcoin USD chart. And what we can see here is that we have essentially, since the beginning of March, been stuck in this descending channel where we're constantly putting in lower highs and lower lows. Now, what we can see kind of is like substructures within this larger macro structure is we saw it kind of like from the end of April to the beginning of May, we kind of went into this small like little wedge thing that we ended up breaking out to up into the top side where we then got rejected, tried again, and then we rejected and came all the way back down to make a lower low. So this pattern right here looked like it could have potentially been the start to something bearish, but it did get rejected, and then we came back down. Again, we came back up, tried, came back down. Now what we're seeing here though is we're forming another one of these wedges, and I do think that it is possible that we could be seeing another attempt at a breakout on the wedge to then essentially make another run up at the top of this channel. And then from there it would just, hopefully at that point we could break out of this channel. But ultimately I think a lot of the market is waiting for this like bearish structure to be broken. I think there's a lot of belief and sentiment that it can do that, but until it does, people are kind of, I think, waiting on the sidelines and maybe not going as heavy as they might into their crypto investments. So this is something that I want to show just because, as we can see, like we are seeing a pretty nice wedge coming up here. Now, whether we can break out of it to the upside and take another run at this, descending, the upper level of this descending channel, or, who knows, maybe we'll break down and we'll take another run at the bottom end of the channel. And if that were to happen, you can see I created another couple zones here, this one and this one. These are probably kind of the next two big zones that we would be looking at if we were to break out of this descending channel to the downside. So moving on, I want to go talk about the stock to flow model. Now we've been over this a couple times on the channel, but I do think this is worth coming back to just because we can see how historically reliable that this chart has been with the, not necessarily predicting, but giving a good sentiment on where Bitcoin price is, at least compared to historical cycles, right? So what we can see is we're sitting in about the mid orange section. And so we can see, mid-orange section happened about right here, and then it was right about here, and then it was right about here. Now, one thing that we can see in the past is we actually have kind of a split here is if we're looking to like map, if we're looking to like map trends onto this model, right? So what we can see is we actually started here on this cycle and this cycle where the orange is actually above the stock to flow trend line. But what we can see on this cycle as well as this cycle is we're actually below the stock to flow trend line. Now, obviously this has happened at basically every point in the past when it comes to the Bitcoin halvings. So, I mean, typically what we see is we see a dip below, and then we, see a spike up, maybe a retrace back down, a spike up again. Same thing here, dip below, spike up. This was a much longer retrace to about the mean of the line, and then we saw another little spike up again and another spike, and then we came back again here. Now, once again, we did see a spike up here. This was in, March when we had that kind of run up, right before the halving. And now we are seeing kind of a trace back here. And again, who knows, this is, past performance is not an indicator of future performance. So, but historically, what we could maybe expect to see is, kind of catching up and potentially breaking over this trend line at some point. Now, as you might see from the stock to flow price predictions here, this would be anything from $164,000 to anywhere up to $400,000 Bitcoin, $420,000 Bitcoin, depending on where this were to break above that trend line, and then we'd expect to kind of see it come back to the mean and even drop under the mean, which is at 446,000. I don't know about you, but that'd be a really nice place to retrace back, even if we go under it a little bit, and we settle at 200 or 250. I would be perfectly fine with that. I don't know about you. So this is essentially kind of what we're seeing on the stock to flow model. Again, we don't know if that's a guarantee or not. Well, we know it's not a guarantee, but we don't know how close it's going to follow it based on historical performance, I guess is what I'm trying to say. So moving on, I wanted to look at something we haven't actually looked at on the channel before, and it's the Mayer multiple price bands. Now, this is an indicator. Essentially, this guy, obviously his last name was Mayer, He basically he takes a Bitcoin price and he divides it by the 200-day moving average, and then that essentially gives him like a band or like a range essentially, or I guess he creates a multiple off of that, right? So it's like a certain multiple gets you into the oversold territory, a certain multiple gets you into bearish, bullish extension, overbought, right? So as we can see historically, we in a couple of the first cycles we did actually exceed past the overbought territory. In 2017, we actually did not exceed past the overbought, but we did go into the overbought. And then you can see on the 2021 cycle, we just barely snuck into the overbought right here. So we have seen that, historically that has been what's gone on. And if we look here, we did almost barely, I think we did actually, we just barely creeped past the bullish into the bullish extension. But, as you can see, we've never really gotten anywhere close to overbought. So now whether, the historical trend holds remains to be seen. But if it were to hold, then we would expect to see, right now the bullish extension, essentially where we run out of bullish extension into the overbought territory, is anything past 157,000. So if we had a Bitcoin, let's say if Bitcoin were to run up to 160 or 180, that would hold with the prior trends that we've seen in the past. I think that's possible. Who knows, how likely it is, or, I want to say that it's likely, but, we don't really know. I mean, especially where there's so many macroeconomic issues going on with interest rates and economic uncertainty, not just in the US, but globally. Like there's a lot of things that, Bitcoin is still kind of potentially, swimming upstream as far as some of these economic factors are concerned. So the next thing I wanted to focus on was the Bitcoin cycle repeat chart. Now this chart's kind of interesting too, because, ultimately what we're looking at is we're looking at a whole bunch of, if Bitcoin were to break out of this downward channel that we've been seeing, where can it go? Ultimately. And so, stock to flow was showing, depending on how quick we reach above that trend line, anywhere between, 200 to 400,000. The Mayer multiple was showing anywhere probably above, 157-ish. And then what this is this is a Bitcoin cycle repeat chart. And what the Bitcoin cycle repeat chart does is it essentially maps the performance of the prior halving with the percentage gains, right? So if from low to high in last Bitcoin cycle, it was a 5x, that's essentially what it's mapping right now, right? So if we're at 60,000 here and we saw 5x, boom, we're sitting up at, 340,000 or, whatever that is. Yeah, it looks like tops are about 360,000. So we can see this, but as you can see, as was somewhat uncharacteristic last cycle, we actually saw our top before the halving, which is why we see the top all the way over here instead of right here, which is kind of what we've been accustomed to in the past, at least with Bitcoin halvings prior to this last one we just went through. So that's something I want to note. That's why we see the top all the way over here. But as you can see from the top over here and as well as the top right here, I mean, we're seeing, a $390,000 Bitcoin right here, $420,000 Bitcoin over here. That's a decent price for Bitcoin, right? So I think overall, these things are looking pretty good. I will say, if I'm being completely honest, I do have some skepticism if we can see, these high 300, low $400,000 ranges. To me, something in the 160, well, maybe like 150 to 180 range, personally seems to make the most sense. But, who knows? I mean, I saw something the other day saying that Michael Saylor thinks we're going to see a $350,000 Bitcoin by the end of 2024, which is in like less than 4 months, 3 months almost at this point. So, who knows? I have no idea. If we did see a $350,000 Bitcoin by the end of 2024, I definitely would not complain. I just think it's really, it's kind of hard to say if that's actually going to happen. I think if that were to happen, we would definitely need some of those economic tailwinds. Frankly, hyperinflation would be one. Rate cuts would be maybe a more milder one. Institutional demand rocketing would be another one. Those would be the types of things that I would expect to see if we're going to see Bitcoin reach those levels. So the last thing I want to go over on the channel today is what we call this never look back chart. And this never look back chart is actually pretty interesting. But anyway, what this never look back chart does is it shows you the point in time at which essentially they hit a price and it never came back to that price. So what we can see right now is we, I think, currently are at $60,000, which does not look like it's up to date because 60,300 is where we're at right now. But let's just go back to this lower level. Essentially, the never look back chart is saying is we've never hit anything below $53,000. So $53,000 is the lowest we've ever come back to. So ultimately what this chart does, and what I think it does a pretty decent job at explaining, is it shows two things. One, the time value of money and how people are valuing Bitcoin as a store of value over time, as well as Bitcoin just purely as a store of value, right? One of the things that people don't realize, and one of the main core things that people look to Bitcoin for is a store of value. So the way that we can look at this is if you are taking Bitcoin today and you have $100 in the total like dollar ecosystem, right? Your dollar buys 1/100th of a Bitcoin. Well, now if we go and we come back next year and there's now 1,000 total dollars in the ecosystem, but we still only have one Bitcoin, well, now my dollar will only buy 1/1000th of a Bitcoin. And that's essentially kind of the theory behind Bitcoin and all scarce assets, frankly, is when you're in these inflationary economies, it's essentially in their best interest to devalue the money because that means they can spend more for free, basically. Where if you have a scarce asset, you can't print more of it or you can't make more of it, right? And so that essentially becomes the peg at which everything else is valued. That's why real estate historically has been a very well-performing asset. That's why gold has been very well performing historically, silver as well to a lesser degree, collectibles, art. All of this type of stuff is a scarce asset that is essentially not inflating when the dollar is, which is why they only seem to go up ever. So that's kind of how Bitcoin is being viewed, and that's what I think this never look back chart does a good job of showing. So anyway, if you enjoyed the content in this video, please do like and subscribe. It really does help me out. Also, please feel free to leave a comment. I do read all of my comments. I've gotten a lot of, actually really good and really interesting comments the past couple of days, and so I really do enjoy reading those. Also, if you're new to the channel and you did find the information useful, please do subscribe. I do, my channel is new, and I'm looking to hit 100 subscribers by the end of September. So if you could help me reach that goal, that would be awesome. Anyway, thank you for tuning in, and we'll see you in the next video.